The Hedgeless Horseman here. It's August 18th, 2024. First of all, thanks to the sponsors. I'm gonna try to get through this video because there's a lot of slides, and usually I do a lot of rants, as you well know. I thought I would be talking about, how I not would recommend, but it's like a suggestion how one could build a gold junior portfolio, or I'm not saying that you should only be in gold juniors or anything like that, but it's like how I could see someone builds a pretty okay gold junior portfolio, because just last week when gold futures went over $2,500 and closed at an all-time high, and some juniors continued up, it's like I saw more people asking me what my favorite picks were, or what I recommend them buying, or what would I buy if I had $5,000, and I'm very much not comfortable giving out stock tips like that. Because if you don't know what you own, you're gonna end up making mistakes anyway. It's like, let's say you have a case you really really like, and if things go well, you could be holding it for 3 years and make a lot of money, let's say. Uh, Obviously, the higher the risk, the higher the reward typically, and all of that. So, I mean, just throwing a name out there, which, like, okay, let's say a company I really, really like personally right now with my risk profile. I know that, okay, if there's no problem for these juniors to go up or down 30% without that change. They could go up and down 50% without that change, except for sentiment and all that. If you don't know that, you just buy a stock because someone said so, it goes down 30%. What are you going to do? You own something or you hold something, somebody just said, it's like, well, this is a nice stock. It goes down 30%. Does that person have any sort of conviction whatsoever, really? No, might as well sell. Maybe he should absolutely been buying because the case was intact. Or the other side of the coin, let's say something happens with that junior. Okay, the case didn't play out as anybody hoped. There's a news item a week from now. Oh Jesus, they had a heap leach pad failure, or they got their project taken away, or they drilled dusters, or whatever. So the case could be dead in a week from now, whatever, and anybody should really sell. But if you have no idea what the case is all about, you won't identify that. So it's almost like, in some ways you're doing someone a disservice by giving them, let's say, stock tips that they don't understand. Because even if they are, quote, good stock tips, they're probably not going to be able to have any meaningful returns. Or they might, I don't know, buy it way too high or never sell if things go south. You can come up with a bunch of different scenarios. So it's like that is why that is uncomfortable. I like to talk about companies I like right now, for example, and I can change my mind a month from now, 2 months from now, 3 months from now, a year from now. It depends on let's say, what the news from the company is, what happens with other company valuations. So that can change all the time. If you have no idea about, again, what you see is the value and all that, I mean, how are you going to navigate? How are you going to do when the corrections come? So I know, or I should say, I explain, when I write up a company, whatever, or talk about companies here, I say how I view it. And typically I will, say, okay, what's probably the best strategy here? Is it just to buy and hold, hoping that happens? Is it to, okay, you bought something with ounces in the ground and you're just waiting for the ounces to be revalued thanks to sentiment? That's your cue to leave because you don't see any more meaningful growth. I mean, is it a beta play, aka sort of a trading sardine, even though it doesn't necessarily need to be a trading sardine? But if it has a bunch of ounces in the ground, it's gonna be trading like a beta stock. It has high beta, so it can go up a lot just from sentiment and all that. So again, it's like, what are the win conditions? How long will it take for this to play out? Some stocks might be like, okay, if I hold this for a year, because then they have had time to drill here, there, and whatever. Okay, then it makes sense. But then you have to hold it for a year, for example. I mean, some cases that some other or that maybe I used to have, whatever, is, okay, this is a pre-discovery junior. If they hit, they could go up 1,000%, and that's very, very risky. That typically shouldn't be much of your portfolio in those cases. So like, I have no idea how the temperament, how the psychology, how the appetite for risk is for the person that's asking me about it. I don't know how much they have invested. I don't know how much they can afford to lose. I don't know if they have gold juniors already. So it is pretty much impossible for me to give really a good, or give out recommendations, or buy this. That it's just very dangerous. So I'd rather have, again, me talking about what I see in companies, how I think, and then people can either they see what I see and they're like, okay, yeah, okay, these are the risks, this is the opportunity, I see where he's coming from. It's like, if they can accept that risk or whatever, like the story, it's like, then other people like you guys can decide to buy or not buy, or if I don't like a company, sell or whatever. But it has to come from, each and every one, because you are the only ones that know your circumstances, let's say. So it's just, again, it's like, it's not a good idea, I don't think. At least, again, if somebody is just, what should I be buying? So it's like, okay, he's probably just gonna go out and buy whatever I'm suggesting. That's like, oh, this is a story I really like right now, so he's just gonna go out and buy it, for example. Then, of course, like always, it's like, if things go well, typically you won't hear anything about it. If things doesn't go well, some people will basically be very upset, because they thought a good buy in your eyes is a guaranteed win, especially in a short time frame, for example. So again, it's like, I have no idea what people's experience is with gold juniors. I've been bullish, as you well know, increasingly so, especially over the last 2 years. So if I thought, it's like, oh, I'm buying all the time, by the way, so that's why I'm always 100% net long, because I never want to miss a bottom. But let's say somebody bought it like 2 years ago, and now it's down 50% on gold juniors. And it's like, I'm just buying more and more and more. But that person, if he doesn't understand the cyclicality of this sector and the fact that I'm not a market timer, then who knows? He might be really pissed off. Like, how can gold units go down 50%? Even though if you look at any sort of whatever historical chart or whatever, you see that gold units can easily go down 80% every 2, 3, 4 years. Happens all the time. My portfolio's probably been down 50% or more 3, 4 times just since 2015. But I know that. I know that happens. I know that's how the sector always behaves, but no, not everybody does that. Anyway, so we can see from a psychological perspective that it appears that 2,500 is some kind of psychological trigger. That's like, people got really excited as soon as gold and gold futures went up, because let's face it, I mean, Western investors are not in gold. They're not in gold juniors. They don't believe it. They haven't believed the run in gold ever since 2020, basically, because gold juniors are way lower here, up here, than they were up here. So it's just, I mean, weird, but that's how it is. Other sectors were performing better and all that, so nobody cared. So what we have seen over the last 1-2 weeks is, after the Osisko Mining acquisition by Goldfields, especially the advanced developers and the larger advanced developers, the multi-million ounce developers, who are like most likely to be taken over first, let's say, they jumped. I-80, Skina, I think Rupert probably, I-80 I've already said, Bonterra, which is partnered now with Goldfield since they inherited the Osisko Mining position. So those companies jumped. that started some kind of, it got people to believe that gold juniors could actually go up and not only always go down. I mean, everybody that's been in the sector starting 4 years ago have never seen this sector really go up. So of course it's hard to believe that it can go up, as Rick Rule says. Everybody's forgotten that the juniors can actually go up. But then we also had this gold, uh, you know, popping its head above $2,500, and that just brought more fuel to the fire. So we didn't just have the pop from the Cisco mining, but we had the sentiment was already getting a bit more sensitive to the upside, and then we had the gold going over 2,500. So now it's like more and more people started to care. And again, I haven't seen. I mean, my tweets I think had like 3 to 6 times more. What's it called? Interactions than 2 weeks ago only. Even though gold juniors were cheaper 2 weeks ago. But that's always how it is. And it's like, do yourself a favor and just suck in. I was gonna say like a sponge. Like note how psychological. Note the change in psychology. Note how Friday we ended actually on kind of a high note, and people were happy. People were talking about gold juniors. People asking other people about what should I be buying, what should I be buying. Fast or rewind the tape 2 weeks ago, didn't get much of that. So, I make a tweet, 3 likes or whatever. It's like last week some tweets got 50 likes, some 100 likes, whatever. So you can see basically the sentiment changing in real time, and it could just from a day to another. And if you looked at any sort of junior stock that's been around since 2015, you can see in 2016, for example, January, when the juniors started doing the best quarterly rally they've ever done. I mean, the stocks went up 5 to 1,000% from bottom to top in 8 months. Nobody had any idea that was going to happen. Nobody knew the bottom was the bottom. Absolutely nobody. Nobody believed the sector could even go up. And it just turned on a dime and then just went higher. So what we shouldn't really be excited about is just the fact that, gold went over 2,500. What does that matter? Not much really. I mean, think of the gold juniors. How much does the value of a gold junior change from gold at 2,480 to 2,537? I mean, it's almost nothing really, because if they're not in production, even the producers. I mean, if gold goes down tomorrow to 2,480 or whatever, you had a one day that you get 1% more from the daily production. It's kind of meaningless really, but it affects sentiment. And obviously, if we can have higher prices for longer, that's just gonna bring in more revenues to the gold miners. So it's not like it's absolutely meaningless, but in a sense it's sort of meaningless for the gold juniors because they don't have operations. But it affects sentiment. So it's like what we really shouldn't be that excited about is the fact that gold is going higher. I'm mostly in gold juniors. I am super excited about the fact that a lot of gold juniors, the better ones, are pricing in like a $1,600 gold price. But the gold futures are at 2,537. That is, to me, immensely more important reason to be bullish gold juniors than what gold is doing. Because gold juniors could not, right now, in another universe, they would be pricing in $2,800 gold. And they would be sells. Because there's a speculative premium. You're paying for an upside that has to materialize for your investment to reach fair value. That is not margin of safety. That is a speculative premium. And note that juniors could be up 100% in a month, and all of a sudden half of all the bull gains are already gone. And it's like, what do you mean by that? Well, as I talked or I showed in a recent video, I showed a guy I had some discussions with on Twitter, and he said, well, juniors can go up 1,000% in a bull market or a bull leg. So if I miss the first 100%, I'm okay with getting 900%. That's not how it works. he's not gonna, if he misses the first 100%, he's not gonna miss 100, and juniors go up 1,000% from bottom to top. He's not gonna miss 100%, so he's not gonna get 900%. He's gonna get 500%, or actually 400%, I guess. No, 500%. Yeah, Jesus, it's hard with exponential stuff. But basically, you cut your future earnings in half. I mean, just think about it. If a stock is going to go to $10, you bought it at $1. It's going to 10x to get to $10 per share. If you bought it at 2x, that's 5x. That's 400% instead of 900%. So pretty much cut his full bull market return in half by missing the first 100%. That's why I cannot, as I say all the time, I cannot afford to miss a bottom. That's the only way I can pay for the corrections. I have to, so far I've been fully invested from here, here, and all of that. But in gold juniors. And yeah, so I mean, the big gains are not made in the bull market. The big gains are made buying the bear market. People didn't know this was a bull market until, I don't know when people got convinced. But the big returns is from buying in an obvious bear market. You just get paid in the bull market. People that jump in a bull market, let's say they jump in here so they can get that return and they feel really smart and happy about it. Hopefully they can get out at the top. When they get in and people know it's a bull market, the people that were averaging down at the depths of a bear market, they're already up a shit ton. They can even afford this because they didn't buy in here. They increasingly bought in here. And yes, they would be, let's say they started buying here. Red, more red, averaging down. So it's like their average goes down somewhere along those lines. In the end, they might have an average here. Yeah, they're going to be up a shit ton when the momentum traders get in. They're going to be up immensely at the top. They're even going to be up after the next correction, all that. So yeah, simple stuff. One thing, and I'm going to get to this later actually, or we're going to point to it more. So this is a slide by Gold Discovery. Will the mining bull of the 90s ever return? No, this actually isn't the slide I was going to look at. Okay. I think Gold Discovery, I'm going to see if I can find it. It should be... Maybe I can't find it. Well, he has a slide. I can't find it now, apparently. There's a slide he has done with... I'm talking about Luke. I assume he's the one. Okay, that's Prospect. Franco. Anyway, okay, I can't seem to find it. But there's a slide done where it shows the best 6 months returns after a discovery. And that's typically, what when some companies made discovery hole or holes and it turns into a big discovery. So it keeps going later on. But there are some huge, there's like 400 to 2,000% returns within the first 6 months in some, the absolute top of the best discoveries. The funny thing about this, and maybe I should actually get into that. No, I'm going to get into this later, actually. First, we're going to look at an interesting tweet. This is from Willem Middelkoop. This is... Oh, Jeff Christian. I think CPM Group. You've probably seen him. Old white dude with glasses. So he's focusing on this. That is no longer the case for junior metals mining companies. Jeffrey Christian, chief executive of CPM Group, as Metals Statistical and Advisory Service, says junior mining is dead. I've been running CPM Group for 33 years, and for 32 of those years, we were talking to people about investing in mining companies or metal. Now institutional and retail investors are simply not investing in junior mining companies, because they have lost money on it for so long. Yeah. So I mean, that is absolutely fantastic news. Obviously, junior mining is dead, and I saw someone who's like, maybe he's right that it is dead. So I mean, that's like saying it's never different. It's never different, but just this once. So this is absolutely great news. Obviously, I mean, imagine if somebody told you that, hey, once in your life you're gonna be aware of a cyclical sector, and you're gonna be aware of it when it's at the lowest sentiment since 33 years. And we know what happened with sentiment when it wasn't as bad as this. That still produced 500 to 1,000 to 2,000% rallies. But apparently now it's even worse. So it's like, again, imagine, I know people don't even, a lot of people don't even think there's going to be another bull market anytime, in the next 5 years or whatever, or 10 years, or even 2 years, because that's an eternity to people. So they're betting on something that's never happened before happening, meaning there's never going to be a gold junior bull. I mean, to me it's obvious. There's a 100% guarantee. To be aware of this sector right now, it's like, I mean, I thought 2015 was a layup. I thought I was blessed to be aware of the sector. Yes, I took, a 54% decline in my portfolio before it went up, going into the 2015 bottom, but I made money. And I've been, since then, my portfolio is up a lot. So I'm very happy that I found the sector so cheap. And I didn't pick the bottom. It had to go down. I bought low, and it still went down 54%. And still, that's not a problem. That's the thing. People think they need the bottom tick. That's just bullshit. Absolute bullshit. People talk about timing, and actually, that's the funny part. I don't really understand why people talk about timing all the time, because you can be off by years and you can still make money over the long term. You're just gonna be able to average down and be okay with having to look at big fat red numbers next to a lot of juniors for maybe years before that happens. But I'm a stock picker anyway, so typically I don't go down 80% like the median junior, or 90 even some cases. But that's great to see this kind of stuff. Also this from William Middlecoop. I think it's done by Formula Stocks. Yeah, I know, he's a guy on Twitter. So this is the most important short: gold mines relative to gold. And it's like, or I should put it like this, I'm not basing anything on charts like this, but it still is interesting to see. In miners divided by gold, yada yada. Hyper bullish gold miners for generations. Miners with more than 40x from 2020. I'm actually not ruling that out. I don't know. I wouldn't say that for Barrick, perhaps. But we have no idea what we're in store for. Gold might be at $3,000 within the next 12 months. Gold might be at $5,000 within the next 24 months. And we don't know what happens after that. We know that obviously there's a lot of debt in the system, so things are not getting better, and they have been getting worse for quite some time, and we have already gold at all-time highs. But this is not an impossibility, given that the low-hanging fruit is typically picked in the gold in terms of discoveries. What else? Permitting has never been slower, so even if you find stuff, you can't bring it on as supply. Now, obviously, there's a caveat that most of the gold that's ever been mined is already above ground. But at the same time, we have kind of a global trend of, countries living beyond their means. So why is it impossible? If we have the biggest bubble ever, when that starts to implode or I mean, it doesn't have to just implode, but it's like unraveling, let's say. Why can't the real value of gold and gold miners go up for the next 10, 20, 30 years or whatever? I don't think this is impossible at all. The market obviously thinks it's impossible. The funny thing is, the junior sector is, again, at every bottom, even though there was a rally like 4 years earlier. At the next bottom, 4 years later, the junior sector is pricing in that there's no chance of a rally. So every single bear market and bull market in juniors, even on a 4 to 8 month, 8 year time frame, is like a black swan. So you shouldn't be surprised that nothing of this kind is priced in. So I'm not. It's like I have no idea if this is going to happen. Again, my base case, my margin is safe is that the gold juniors are pricing in $1,600 gold, and the gold price is at $2,500. I don't need everything of this to happen. Gold juniors just need to reach fair value, and people are going to make a good buck just doing that. Let alone having a miner to gold bull market that's going to last for, I don't know, 25 years, and gold going to 10,000 and stuff. That is just free bonus. The downside is taken care of already. Short from correlation economics. This is of course kind of what people have been talking about. It's actually this kind of shows the sentiment in Western investors. This is the GLD fund, which I think kind of is a Western gold fund. So that's been declining and is back to levels seen when gold was at 1350. Yet gold is at 2,500. So all of this, if this is the Western sentiment towards gold, it's also the Western sentiment towards gold juniors, and this is actually the price of gold. So obviously, there has never been a larger gap between, let's say, sentiment and actual gold price. Which, and of course we only see back to 2010, but I would imagine that gold juniors relative to the gold price have probably never been cheaper for decades. I doubt they were even cheaper at the 2001 bottom. I can't guarantee that, but this is just remarkable. I never thought I would see this. But it also shows that gold juniors, when I started buying late 2015, they were lowly priced, but they weren't actually necessarily cheap. You had to be a contrarian, because at the time any gold project was actually worthless pretty much. So you bought gold juniors that had a market cap above zero, even though their projects had zero value at that gold price. So then you had to actually be a contrarian, bet that, hey, gold prices are going to go up because we have to have a gold mining business, kinda, and the price of gold will bail out the juniors. And that happened, and that's when, just from this move here in gold brought up 500 to 1,000% rally in gold juniors. This is kind of funny. It's like, I tend or try not to bash people too much. I mean, I don't really comment on companies I don't like. I don't really like to point out when people are wrong, because, everyone is wrong a lot of times, and especially in a cyclical sector like myself, again, like a perma bull, I probably look wrong in 80% of the time, because that's about as long as the bear markets persist, and the bull markets are like 20% of the time. So if we're just looking at any given time frame, if I say something is cheap, then it's down 50%, and then obviously one could say, well, you were wrong, it wasn't cheap. Well, I never say that it's going to be a bottom. I don't try to predict when we're going to have a gold bull or mining bull, or when the gold juniors are going to go up or down. I only have one thing that guides me, and that's what I think the value, the risk-adjusted value, the risk-reward is in a gold junior, and that's why I buy them. Again, and you can look back in my track record. There's a bunch of explorers that didn't work out, as per the high risk, high reward story. So high risk, high reward sector. So what did Jesus say? may the one without sin cast the first stone. So I try not to cast stones because it's like everything is hard. Even the best investors. I listen to Michael Gentile, for example, and he said, he would be very, very happy if he can nail 4 out of 10. And that's a multimillionaire who says that. I think, if I remember correctly, he said, 4 out of 10 in the junior space would be like being Warren Buffett, somewhere along those lines. Most people don't see that, obviously. They have no idea. They think it's low risk, high reward, but it is actually high risk, high reward, typically. But this is just, yeah. I mean, this is a tweet from Peter Spina of GoldSeek, and this is from 2020, pointing out that already in, I don't know when this was. Maybe it was 2020. This is 2017. Gold 850, 890, guys. So he has, and I remembered this. I used to follow him. He was screaming about a gold bear market, that gold was going to crash to, actually I thought I remember it was $1,000, but it was even lower than that. So he's been, and Peter Spina basically made fun of him when gold hit 1700. So by then he was already very wrong. And of course, if you're a trader, price is all that matters. Price direction is all that matters. It's not like, I bought, I think gold is whatever, expensive or something like that. I mean, he gives timelines and all of that. As a trader, price is everything. As a value investor, if you buy something you think is cheap, it goes down 50% before it later hopefully goes up because the story is intact. I mean, are you wrong really? Well, you didn't say it can't go down. You weren't nailing that. You weren't saying it can't go down, but you were saying, okay, I think longer term, my downside is protected because I think it's should be up 100%, but it goes down 50% more. So now it has to go up 300%, and that could very much likely happen, and you will have made money. But that's the thing. So a value investor is not predicting price on a given time frame, like what's going to be at next month or necessarily. It's like you have an idea what you think it could hit one day. That's basically it. But it's funny. It's like I watched, because I saw an interview and I looked at his site, and you can see it's like testimonials. I mean, it's crazy, and I see him. He sells I think he has a report like the gold miner portfolio or something, where you could pay $1,200 to buy 15 gold stock tips. It's like, okay. And the fact that he has these as testimonials, given that he's like been immensely wrong. I think gold is up 100% or something since he said it's going to crash. I mean, I think one can figure out why he sells subscription-based whatever and sells these newsletters or reports or whatever for $1,200 and stuff. I mean, the simple reason is I don't think he's making much money. Let's say again, it's not easy. It's of course not easy, but it's a bit almost sad to see. It's like, I mean, this is probably the guy that's been more wrong than most people, and he's getting testimonials from very famous people saying that he is the one that has nailed it. So it's like up and down world. This is an interesting longer term graph. S&P TSX Gold Index. I don't know what companies were in it in the 50s and 60s or whatever. But you can see actually since this time, I mean, yes, this is the correction down to 2015. And obviously, I mean, the people that mostly bitch and whine and tell me that gold juniors suck, I mean, most of them bought in here, for example, or I don't know what year. This is actually 2015. So later than that, from 2020. So again, the people that bitch and whine about the gold juniors are typically the ones that never even been in the sector in a bull market, or maybe as always they bought it here and here they bitch, or bought it here and here they bitch, or bought it here and here they bitch. One thing to note that is very interesting is like look at a 5-year rolling performance and 10-year. So worst 10-year performance kinda, okay? That was a bottom. So it sucked for 10 years, more than usual. Next 10 years, increasingly well. Then it peaked, started whatever trading sideways. I mean, this is what I'm talking about. The more pain that's behind, the longer and more it has sucked, the better the buy it becomes. Here it sucked a lot last 5 years. That was a bottom. Sucked a lot, well, not really a bottom, but wasn't as low as this. Here it really, really sucked. Huge bottom. And now we've been down here. So I mean, again, look at any cyclical sector and look at historical charts, and you can tell it's like the only way anybody could forever make money in this sector is to, let's say, start buying any sector, cyclical sector, when it's down 50% and just buy and buy and buy and buy. It might take years or whatever. Sooner or later, that's going to be up a lot, especially if you average down, and from any bottom, it's going to be up a lot. That is like a broken clock. Always happens. Gonna be like that forever. Absolutely forever. So as if you find yourself being able to buy a low in a cyclical sector, I don't see how you're ever gonna really lose money over the long term after that. This is a slide of First Nordic. No, not First Nordic. First Majestic. I would just like to point out again, when I see so many people saying that, oh, you need perfect timing, this sector sucks so much, nobody can make money in this sector, it's impossible, why do I even bother with juniors, I wish I never found this sector, whatever. And it's like, I'm asking myself, it's like, how can you lose in this sector? How can anybody lose over the long term in this sector? To lose over 2 to 4 years is nothing. We can see it all the time. This was more than, 4 or 5 years. Basically everyone lost. 3 years, everyone lost. 4 years, everyone lost. The thing is, what happens after those periods? Boom, boom, boom. What's going to happen in this period? I'm not saying specifically for First Majestic. They might go bankrupt tomorrow for all I know. I have no idea. But the sector overall is going to go boom. How hard is that to figure out? That is what cyclical sector means. That's what cyclical in a cyclical sector means. It never goes up forever and it never goes down forever. It goes up and down and up and down. And just to point out, it's like at this point, at the peak of the 2016 rally, any single buy anybody ever did and just held, this is obviously theoretical because again nobody actually buys low or holds or whatever, but still at this point every single past buy in this chart at least showed neutral or a profit. When it peaked in 2011, every single buy that anybody had ever done was up some to up a lot to even more to a monstrous amount. In the peak of the silver squeeze, everybody that's ever bought First Majestic within this rectangle here had every single buy in the green. The only time in the history of First Majestic that nobody so far has been able to make any money or these buys up here, here, and here, because these levels have so far never been reached. So when you see this, that it's like, I would argue that it's almost impossible not to make money over the long term if you can average down in a cyclical sector. So that is the funny part, and people still have the stomach to say that it's impossible to make money in this sector and this sector sucks so much. Yeah, okay. Where's the evidence of that except everyone's portfolios? Yeah, okay. Why is that? Well, 95% doesn't beat an index. And this is even more volatile than the general stock market. So may I suggest that it has something to do what people actually do, not with the market itself. It's like I've been saying, that a bear market is not bad or good by definition. It totally depends on what people do in it. If I bought here and sold here, then the bear market was really bad. If I bought here, didn't sell here, and it keeled over, even the bull market was bad. Because I got, suckered in at the top, let's say. If I started buying here and bought all the way down, I would be up on every buy at this point. If I started buying here and bought all the way down, I would be green on every single purchase I ever did in First Majestic at this point in time. The only reason people think this sector is so extremely hard, A, really shitty stock picking, B, everyone tends to get into a sector near the highs and not care about the lows. And C, they don't buy down here, they sell down here. Then imagine how hard it's gonna be to make money if you buy up here, sell down here, buy up here, sell down here. Yeah, no wonder you don't make any money. Not over the longer term, you're just gonna destroy more and more money if you keep doing that. Imagine if you bought some here, sold some here, bought some here, sold some here, bought some here, sold some here, bought some here, sold some here. Are you gonna lose money in that case? No. And I'm not advocating for First Majestic. It's just one that's high beta, been around for quite some time, where you can see how this sector behaves. This is another high beta stock, but it's been merged. It's merged and stuff with another company. So it has changed, but it's just become even more high beta, basically. But you can see this exact pattern. It's not easy to find some that hasn't changed much, because there's obviously, dilution with time and all of that. And I mean, Bear Creek Mining started having they acquired a mine, for example, so that changed from just having a big fat silver deposit, which was never developed really. So they just sat with a bunch of silver that just, got valued at 50 cents to $5 per ounce and stuff, and back again. But you can exactly see this kind of stuff. And now this stock is here. And people are talking about it's too risky to invest because they think there are downside risks. Yes. Do you think when they bought up here and are bitching down here, do you think they thought about downside risk up here? Of course not. Then all the talk was upside risk. So what we do to shoot ourselves in the foot and basically destroy our portfolios has nothing really to do with bear markets or bull markets. It's what we do when they happen, how we behave in them. Because let's face it, this stock could go like this forever and still majority of people would still lose money in it. Because they would never figure out or have the balls or have the conviction or whatever to buy these stocks at the lows. Never. They just sell out and go find another sector. They go into tech or crypto or whatever, which is up here. And again, they might never figure out that simple solution. Start buying bear markets. Start buying bear markets and cyclical sectors, and don't stop buying until it's an obvious bull market. And when it's an unobvious bull market, it's going to be up here or something. Here it wasn't an obvious bull market. Here it wasn't an obvious bull market. Up here it was an obvious bull market. Down here it was an obvious bear market. Down here it was not an obvious bear market. It was much more obvious that this has been a bear market down here. When it's most obvious that it's a bear, best time to buy, and it just gets better and better, because this necessarily didn't have to turn around here. It could have turned around here and gone like that instead. So it's just that the buying just goes exponential in terms of merit. So this is basically the stock I just showed, and you can see. Well, actually, I think I'm gonna skip this part and put it in another video. because I've been talking for so long already. So yeah, what was I gonna say? Yeah, that's about it. I guess this became kind of a, I don't know, copium or just some musings, reflections on the what we've seen the last week, and the common sense kind of stuff. I mean, it's like, let's put. I have no sympathy for anybody. If you sell, if you sold these lows that we've seen, you have no right to complain that the junior gold sector is hard. You made it almost impossibly hard. How on how on earth how on earth is anybody going to make money by selling these lows? If you do that, don't go crying to anybody that you can't make any money. That's totally up to you. That is you. Because again, I see a lot of people say that you can't make money in the gold juniors. And I just don't buy it. I think it's the best sector there is because it's so predictable. What it basically means is that that person can't make money in the gold junior sector. And if you, again, just to give some copium, if you only been in this sector during this period of time, you are not the world's worst investor simply because your portfolio is down 50%. Again, this had my portfolio down 50%. This had my portfolio down 50%. This had my portfolio down 50%. This, actually, I'm not down 50%. But I think that has to do with, myself getting better and better. It's like, I mean, back here I didn't know much. I just keep improving, think about investing strategies all the time, getting better at stock picking, all that. So I would expect my portfolio to kind of do better and better. Well, it's at least have a smoother run instead of maybe like that it's maybe something like that. Because okay, you get better at judging. Okay, maybe this is not the time for beta. Maybe this is the time for beta. This is not the time for diversification. This is the time for diversification. Stuff like that I didn't know in the start. I in a sense I was kind of lucky that I went into high beta because people said ounces in the ground were cheap, and they were. Anyway, I'm gonna get back to that. So thanks for listening. This is not buy or sell recommendations. Don't invest money you cannot afford to lose. Especially don't buy anything you need to show a profit in like next month or whatever. I mean, a year is not much in this sector. A full cycle might be. I mean, this is 8 years. I think this is around 8 years, and you get the idea. I mean, it's like to have a full cycle, we're talking 8 years. And as always, the worst thing you can do if you bought high is sell cheap. That's even worse actually than to buy high. That's literally the worst thing you can do. If you buy high, you can only go down 100% on any given investment, but any given investments can go up a lot more than 100%. So yeah, I mean, if you're down 90% in your gold junior portfolio, I mean, yeah, it's going to be tough. Obviously, it's going to be a long slog. It doesn't mean that gold juniors can't go up 900%, of course, but the goal is not to be down that much. But if you're down 90%, that also means that if you use some more dry powder, I mean, it's if you start up with $100,000 portfolio, don't have much income, and it's down to 10,000. I mean, even a 1,000 addition at around these lows obviously have a much higher impact than if you added 1,000 to your 100,000 position. So that's the good thing, actually. Not a good thing, but the less capital you have, in a sense, it can at least be rectified easier. I mean, it's harder if you started off with 100 million, you retired, have no income, and you're down to 10 million. I mean, to add any meaningful amount to a $10 million portfolio. That's kind of hard if you don't have any income at all. But again, if you went from like $100,000 to $10,000, I mean, you could probably, scrape together $1,000 over the couple of months or whatever. I mean, you might be able to double it, and in that case, if you double it to 20,000, I mean, you just cut the future return you needed to get back to even in half. I mean, that's a huge improvement. Thanks for listening. Not investing advice. Consider me biased if I talked about any companies and all that. Have a good day. Click like if you like stuff. Bye bye.